Hello my dear and beloved subscribers, my name is Polly and I have been involved in trading for quite a while to share my knowledge with someone else. That's why I created my YouTube channel. I'm really happy to see new subscribers to the channel, so if you already started watching this video and are interested in trading, to be sure to subscribe. I share everything I know about trading here. Today we will focus on patterns. The engulfing pattern is one of the important candlestick patterns in the candlestick analysis, and today we'll tell you how this pattern looks and how to identify it on the chart. I will also show you a trading strategy based on this pattern. The engulfing pattern usually consists of two candles. Let's imagine that two candles have formed on the chart. First, there was a green candle. I will show it as a large green rectangle. Of course, this candle has shadows and a shadow on the top and a shadow at the bottom. Now, when the next candle forms after this candle, we can call it engulfing pattern if three conditions are met. The first condition is simple. The next candle must be on the opposite color. That is why in the first candle was green. For it to be an engulfing pattern, the red candle should appear on the chart afterwards. And nice to say, if a red candle has formed here for an engulfing pattern, the next candle should be green. In general, in an engulfing pattern, the candles should be of different colors to consider this formation as a reversal. The second condition of engulfing is a bit more complex. The body of the second candle should be larger than the body of the first candle. And I'll draw it exactly like that in the example. The body of the red candle is larger than the body of the green candle, meaning the body of the red candle completely engulfs the green candle. If you break it down, the low of the second candle is below the low of the first candle, and the high of the second candle is the same as the high of the first candle. So it turns out that the body of the first green candle is completely within the red candle. And finally, the third condition must be met to call it an engulfing formation. The shadows of the subsequent candle must indeed cover the shadows of the previous candle. While I'm drawing, I want to remind you to subscribe to the channel. And it will not only make me happy, but also benefit you because you will learn many training secrets. I also look forward to likes on this episode. I drew the shadows here as example. In general, the shadows of the second candle or wicks or tails, as someone called them, should simultaneously be above and below the shadows of the first candle. That is the case in my example. The lower shadow of the red candle is below and low of the green candle. I will mark it horizontal lines for convenience. Alright. The high of the red candle should also be higher than the high of the green candle. That's how the red candle completely engulfs the green candle. Now, let me briefly remind you of these three conditions. Firstly, the candles should be of different colors, first green, then red, or vice versa. Secondly, the second of the second candle should completely engulf the body of the first candle, meaning it covers it. Thirdly, the shadows of the second candle should also completely cover the shadows of the first candle. If all the conditions are met, this formation can be called an engulfing pattern and traded. Now, trading on an engulfing pattern depends on the color of the second candle. I will refer to it as the engulfing candle. For example, we had an upward movement of the chart. Let me mark it with a simple green line. So, the price was rising, and after that, a small green candle formed. A small green candle followed by a red candle that meets the three conditions for engulfing. In this case, the engulfing pattern's rule as a signal for reversal in the movement. It's most likely that the price will reverse from this pattern and continue to fall. After the pattern falls, we can enter a trade for a downward movement. When the next candle starts to form, the third candle is in the sequence, so we can enter the trade. We can even enter at the close of the second candle. Similarly, if the price is falling and a red candle forms, followed by a green candle with 3 engulfing characteristics, so we can enter a trade for an upward movement. That is approximately how it should form. This turns out to be a bullish engulfing pattern. It often occurs right at the end of a downward movement and indicates a possible price reversal. Now let's find a few engulfing patterns of the chart, open some positions and see how engulfing works in the practice. So just now on the Canadian dollar to Japanese yen chart we had an engulfing pattern formed. The engulfing candle has already closed, so I entered the trade for $100 for 3 minutes. For downward movement, while the trade is closing, let me quickly remind you of the 3 rules of the engulfing pattern. First, take a look at the large red candle of the left. An experienced trader might think that is engulfing pattern. Enter trade for downward movement and close. But that is not an engulfing pattern because the high of the red candle is lower than the high of the green candle. In short, the red candle did not completely engulf the green candle, so I skipped this iteration. However, a few minutes later, a proper engulfing pattern formed of the chart. A red candle followed a green one. The one of the red candle engulfed the body of the green candle, and the high and lows of the red candle covered the highs and lows of the green candle. All 3 rules are met, so which means we can enter a trade for downward movement, which I did. As you can see, the trade is already showing a profit. Let's wait for it to close. So there is just a few seconds left until the trade expires, and the first trade based of the engulfing pattern closes with a profit. By the way, the price movement went over 100 pips. I call it a very strong reversal. Let's move on to finding the next setups. And here is the second setup of the Australian dollar to Swiss francs pair. On the 5 minutes time frame, the engulfing pattern is almost forward, and all 3 conditions are met. Finally, the engulfing candle has closed, so I enter a trade for downward movement, $100 for 3 minutes. It's not as clear as the previous trade, so let me explain it in more detail. Initially, there was an upward trend of the chart, and then a green candle formed, followed by a red candle. The first condition is met. Next, the body of the red candle is larger than the body of the green candle. The second condition is met. The shadow of the second candle slightly exceed the shadows of the green candle. The third condition is also met. By the way, the large red candle of the left is not engulfing pattern because its high is lower than the previous high. That's why I didn't trade it. Now let's wait for a trade to close. So the time has come to end, and I will go to another profitable trade. As you can see, I got another significant reversal and provide that the engulfing patterns works well. Thank you for your attention, and I'm delighted that you watched the video this far. And if you enjoyed it, I kindly request you to show your support by liking it. So, additionally, I encourage you to subscribe to both my YouTube channel and my Telegram channel to stay updated with my content. By joining my community, we can foster a friendship and engage in further discussions. I appreciate your support so much. Bye.